The Financial Survival Network, helping you to survive and thrive in the new economy. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. You know that we've been covering junior miners for quite a while now, and it's been a perilous time, a really difficult period of time the past 2 years, and those who've survived are now poised to really cash in on the current run-up in gold and silver prices. And with me now, I've got Craig Lindsay. He is president of Otis Gold Corp., a Vancouver-based company. They trade on the TSX Venture. Their symbol is OOO, which is a great symbol there, Craig. How'd you pull that one off?
Just a lucky circumstance. No planning really went into it, but it's a symbol that people can remember pretty well. I also want to point out we trade down on the OTCQX market in the United States under the symbol OGLDF.
Right. So you didn't have to go pay big bucks to get that symbol, huh?
No, nothing at all. You can, with the TSX Venture Exchange, you can request symbols, and our company was Otis Gold Corp, and so OOO was a pretty good symbol to have. There's a bit more to the story which your readers may not be interested in, but there's a famous restaurant chain up in the western part of Canada where we're based called the White Spot, and they have these hamburgers which are very famous, and they're famous because of what they call their secret OOO sauce. Mm-hmm. So it was a very easy symbol to remember from that respect, but most people down in the States, it probably won't mean anything to.
All right. Well, the next time I'm up in Canada, I'm checking out that place because there's nothing like a good burger. And, you know, being in the mining industry over the past few years, it's really been a test of faith, hasn't it?
Well, that's true. In fact, it's been tough enough that that's pretty much all I can afford to eat these days is hamburgers.
Yeah, but it looks like things are turning around at this point, doesn't it?
Absolutely. I think your readers may have, or listeners may have seen, a good run in the price of gold. We've had a really tough time in junior natural resource markets, but we seem to have turned a bit of a corner here this fall. Some commodity prices are rising again, gold and silver in particular, and we're starting to get a little bit of wind in our sails. And frankly, from an investment point of view, for people who have been sitting on the sidelines, it is a pretty exciting time to look at getting some exposure to some of these junior natural resource stocks, because they are trading right at the bottom, like the extreme bottom of their ranges. And so there's an opportunity for a significant amount of capital appreciation in many of these plays.
For sure. Some of them you can pick up for mere pennies. And a lot of these companies are worth more dead than alive right now, the way the market was valuing them. And that, to me, being somewhat of a value investor, although I wouldn't say I've been overly successful at it, but value investors have to be noticing the junior mining sector now. I mean, I've seen acquisitions take place for ridiculously low prices, like under $50 an ounce in the ground, that you just shake your head and say, why doesn't the world understand this?
It is frustrating. I mean, you look at a company like Otis Gold, in particular, we're trading at $5 an ounce in the ground. I've got 1 million ounces of 43-101 compliant gold resources, 820,000 ounces in our flagship Kilgore project, which is located on the eastern side of Idaho. And we are literally trading at a market cap ounce in the ground of $5. And it's shocking relative to what historical norms are, and certainly more advanced stage companies, development stage deals, are trading in the $100 to $200 an ounce range. So with these or some orphan companies such as Otis, there really is some spectacular opportunity for gains.
Yeah, there's just something totally wrong with the picture. I don't know why. I don't think we need to get into why. The main thing is you've got 4 projects in the States. Where are these projects out now at in terms of development? Yeah.
Well, we're focused in Idaho. That's where our 4 projects are. The flagship project and the one we spent all our money on is something called the Kilgore Gold Project. And it is an advanced stage development style project. It's got 820,000 ounces of gold on it. It's a volcanic hosted epithermal gold system. It'll be eventually mined as an open pit heap leach operation. And that is where, as I said, that's our flagship project. When you're looking at a company like Otis Gold, we are not a grassroots company. We're not an exploration company, which these kind of companies are associated with very high risk and also very high reward. But you can buy a stock at, call it 50 cents, and it can go to 0 or it can go to $10. With a project like Otis, where you've got some strong asset backing in the form of several projects that have mineable resources on them, your downside is limited. One of the things I really like about working in the United States is, number one, the infrastructure is excellent. In a place like Idaho, we have power to the bottom of our hill. There's plenty of water. We're 20 miles away from a railhead, the same distance away from an interstate. You can drive a 2-wheel drive vehicle right up to our drill sites today. So that's an important differentiation comparing Otis to other companies who are in more far-flung, more exotic places where infrastructure is a huge issue, and just accessing the property for a drill program is very problematic, let alone the whole thought of putting something into production and all of the infrastructure that you have to create to make that happen. The other thing we really like about the United States is that the political risk of working in the United States is way lower than in many other jurisdictions. And, our industry is hard enough in terms of the science behind going out and finding mineral deposits and putting them into production. And when you have to layer on challenges in various political jurisdictions where you're dealing with a lot of additional risks on top of that. I mean, our business, my attitude is hard enough without the political risks. So we really like being in mining friendly jurisdictions where there's very clear paths through to drill permitting and mine permitting, ownership, tenureship of mineral claims and interests is very clear. And there's never any misunderstanding. It's a big benefit and one of the reasons that really attracts me to working in the U.S.
Yeah, definitely. Infrastructure is key because that cuts down on your development costs manyfold, especially when you have power and a road running right by you, and water, of course. I mean, that's already taken a lot of the guesswork out. And then political stability, we could argue that, but overall it's pretty high in the States. And where are we in terms of developing the project?
We're at the stage where we are starting environmental baseline studies, which go on for 12 months and are a key part of our mine permitting activities. We're also at the stage where we could be moving into a scoping study to firm up what the economics would look like on a project such as ours. Realistically, you're looking at 3 to 4 years away from production. But relative to many other companies who don't even have a deposit, this is actually pretty attractive. And from an M&A point of view, something I want to address, if you don't mind, it creates some interesting opportunities for our investors because we have 2 options. Number one is to go and develop this project ourselves. The second option is to go and either joint venture or sell the project to a producer. And we're going to be attractive to production companies because we've now got a known resource it's economic in that it's got the grade, it's very near surface, it's got spectacular metallurgy, which is how easy it is to recover the gold from the ore. Our metallurgy is very, very good. And we've got these infrastructure benefits. So we are going to be attractive to a producer who wants to add 80 to 100,000 ounces a year of production, which is what a million ounce project could produce. And that's what we've got at the Kilgore project. On top of that, Kilgore is interesting because we've got this existing deposit. The deposit itself is open in several different directions. In fact, we call it the Kilgore deposit. The last holes that were drilled out of Kilgore were 114 and 118 meter intercepts of 0.9 grams per ton, and these started right at surface. We followed this up with what's called a soil sampling program. So we had geologists out in the field taking samples right at the surface and then analyzing these samples, and we came up with a very strong gold and soil anomaly that extended the mine or the Kilgore deposit by an additional 400 meters. So there's lots of room at the Kilgore deposit itself to add significant ounces. And then in addition to that, we've got several other exploration targets around the Kilgore deposit to go and drill. And it's very realistic that we will find additional deposits because these volcanic hosted epithermal systems generally come in bunches, and we found that first deposit and it's growing, and now we're looking for deposits number 2 and number 3. In fact, we thought we had deposit number 2 at the end of last season, but it's turned out what we thought were discovery holes on a second deposit. After additional drilling, it has turned into an issue where what we thought was a new deposit is actually connected to our existing Kilgore deposit. So it's just expanded that nicely. But it's very exciting from that perspective.
Yeah, having that type of quality deposit in a politically stable area with great infrastructure is really like a double blessing.
It is, and you certainly don't get that all the time. But we are blessed with that. We're very, very excited about it. We're starting to get lots of interest, as I mentioned, from production-oriented companies. Something else I want to point out, and it's we own 100% of our deposit, and there are no underlying royalties on the deposit. Why is that important? Well, many companies that people invest in, they don't own their projects 100%. They're earning into an ownership interest, and typically that interest might only be up to a 70-75% interest. So you're buying a company where they still have to go through a significant amount of property expenditures, share issuances, and cash payments to earn their interest. Whereas at Otis and the Kilgore deposit, we own 100% of it today. And then with respect to royalties, many mining projects around the world are subject to royalties that are paid to underlying landowners. And we managed about a year and a half ago to buy out the underlying royalty that was on our property, which was a 2% royalty, and that has now been extinguished. So owning this property free and clear with no encumbrances in the form of royalties really helps with the economics.
That's really great. And Idaho is probably the second best state for mining in the U.S. after Nevada. So you got things lined up really well, and you got 3 other projects to boot. Obviously, you go for the relatively lower hanging fruit first, where you're going to get the most bang for your buck. But you got 3 other projects that all look pretty good in their own right.
That's true. I think you've hit the nail on the head. We've really been going after the low-hanging fruit, and we do have one other project that's got an existing resource on it. It's a real fascinating story, actually. It's the deepest it's been ever drilled has been 400 feet, and many of the holes that have been drilled on the property have ended in very nice ore-grade mineralization. We went out and did a geophysical survey on that project. It's called the Oakley Project, and came up with a number of strong geophysical targets. So there's great potential to significantly expand that deposit at depth as well as along strike. Again, because we are a smaller company and have a limited treasury, we've been focusing our efforts solely on the Kilgore project. Not solely, but primarily on the Kilgore project.
Yeah, you have to prioritize, obviously. And the good thing is, once the Kilgore site is capitalized upon, then you've got cash flow to work on the other projects, which also show quite a bit of potential.
Absolutely, and we've got some really neat, the high and the gold bug projects. Again, we own those projects 100%, have some excellent potential. They're earlier stage, but I have to say that they're not grassroots in that there has been drilling on the properties, and they're actually historic resources on those properties. So we think we can add ounces pretty quickly to those projects when we get out to them. So
that's great.
It is, yeah. It's a real interesting time, and I think it's a fascinating little story for investors.
Oh, sure. And management, obviously, you're experienced in taking these resource projects and capitalizing on them. What about your fellow management?
Well, the key to our story really is that my geological team made up the core of the old Echo Bay Mines U.S. exploration
of course.
team.
Yeah.
Dr. John Carden was the director of U.S. exploration for Echo Bay Mines.
Mm-hmm.
Mitch Bernardi was the senior project geologist with Echo Bay. And a guy named Don Ranta, who's on our board of directors, was the vice president of global exploration for Echo Bay. So we've managed to basically reincarnate that exploration team at Otis, which is a pretty unique situation. And what's even more interesting is that Echo Bay was a prior operator out at the Kilgore project, and our Mitch Bernardi was the guy that ran that project for 3 years for Echo Bay at Kilgore. And in the mid-90s, when Echo Bay operated the project, this is probably one of the most interesting parts of the project, is that Echo Bay, this was going to be their next production story in the mid-90s that was going to produce about 45,000 ounces of gold a year for 6.5 years. And they were going to put this thing into production in a $350 gold environment. So it was economic at a $350 price of gold. And now we're sitting at the $1,700, $1,800 range. And a lot of people are talking about $2,000 plus gold. So, yes, capital costs have gone up for mines, operating costs have gone up for mines, but we think we're in really good shape with a relatively near-term production story.
Yeah, it's real interesting that you wind up taking these projects. Maybe it was profitable at 350, but now it's really profitable. I remember my uncle actually was a gold miner in the Yukon, in Alaska rather, in the 50s, and he said that they closed the mine. There were still lots of gold in that mine, but at $34.75 an ounce, it wasn't economical. Now at $17.70, they're reopening that mine. They know the gold is there, and you're kind of in the same position, except that your mine was profitable at $350, so it's certainly going to be even more profitable at $17.70. So, and Craig, just tell us briefly how you wound up getting into mining, because it's kind of interesting. Like, you grow up in West Virginia, you're probably going to be a coal miner. You know, you grow up in Silicon Valley, you're going to do computers. You grow up in Vancouver, you wind up in resources, right?
Yeah, I mean, that's we have always had a strong resource base in the province of British Columbia, where I reside. Vancouver itself had a long history of being a center for mining finance in the junior mining industry, and it's something that if you spend any time in Vancouver, you do get some interesting exposure to. That said, I mean, I've been focused on the mining market for the past 8 years or so. But I have to go back further. I'm 46 years of age. My first contract that I had when I worked in Hong Kong when I was about 22 years of age, from kind of 22 to 25. And I was working in a venture capital and corporate finance outfit in Hong Kong. And the first contract that I worked on was a gold mining operation in the Philippines. So I've, for my whole career, I've been in and out of the mining space. In the late in the late 90s, I took a Mexican mining company public on the Vancouver Stock Exchange. It was a producing gold company. It was called Miranda Mining Development Corporation. We ended up selling that very quickly in a pretty attractive M&A transaction to a company called Wheaton River. And that remains a very large-scale producing gold project in Mexico. So, I mean, I've had lots of exposure to the mining space. My background is in corporate finance and investment banking. It's interesting. I mentioned that I spent time in Asia. I'm still over there quite frequently. And the connection to that and mining is that many of these Asian companies, particularly Chinese companies, have been starting to take significant interest in natural resource projects, and we've managed to generate some investment interest in our company out of Asia, in particularly China and Hong Kong, and I think that's going to continue to be a growing market for capital to help fund the development of resource projects around the world, and so it's an interesting connection from that perspective.
Yeah, well, it sounds like you got a lot of bases covered there, Craig. And so the website is otisgold.com. On the TSX Venture, it's OOO. And on the OTCQX, it's OGLDF, right?
Yeah.
People want to find out more, they can contact you guys through the website.
Absolutely, and I look forward to responding to any investor inquiries. And I want to thank you very much for taking the time to hear about our story.
Well, it's a great story, and financialsurvivalnetwork.com, we're all about the story, about what's really happening under the surface, and I think you've given us a good insight, and we'll look forward to checking back with you and seeing how the projects are progressing.
Great. Thank you so much for your time. I really appreciate it.
Hey, thank you.